Fabrizio Vettosi, as expert shipping professional, being Vice Chairman of the Finance Committee of Confitarma, but also Managing Director of the Venice Ship and Logistic Fund, and with direct experience in banking and boards of shipping companies, has the task to provide us with an introductory speech with a picture of the latest trends and developments in shipping finance. Since during the other editions of Shipping and the Law, he always brought views from different angles, and he always feeded an active discussion. We are very interested in his speech. Please, Fabrizio. Is this mine?
I think so, yeah. So good morning. Thank you, everybody. Thank you, distinguished floor, which attends this conference. And before to start, thirdly, let me thank Francesco. He's a perfect amphitryon of this conference for new edition in this amazing venue, which is gathering now. So I am very happy, don't listening to the De Profundis sound, but we hosted by a very, very happy sound. So I am not expert of music, but anyway, this is a good news and hope for the prompt recovery of the market, shipping market. So let me joke. So starting starting from the state of the market, just to deliver some figures about the state market, which is quite mixed. So we have the dry bulk market is injured, and you remind my statement in last edition of Mare Forum when I claimed about the Godot. So when I was accused to kill Godot, but probably for dry bulk market, Godot is disguised as a bear, and we are waiting that Godot came back. And so differently from the tanker market, which is very sparkly, and we are trying to ride the bull. So I am very happy to deliver a large picture about the ship finance market, starting from the traditional bank. So the market, the bank market. So coming back. So the bank market is dramatically downsizing since the early of this decade. So since the adoption of harsher capital requirements, capital adequacy requirements, and the shipping banks deleveraged and downsizing their portfolios, as the market is still almost dried, and practically three main relevant players walked away or passed away, let me state. So HSH, CB, and RBS leave the market and practically walked away, and the bank market dropped by more than 25 billions of dollars across last year. So, and same trend, the credit margin rised and marking more than 300 points. And consequently, I can state my concept in one quote. Less banks, the fewer banks, less money, to fewer high-rated ship owners. This is the current state of the banking market today. So going onward, how change the attitude of bankers, of traditional bankers since 2008? In 2008, the bankers, the lenders chased after the ship owners, serving the money by silver plate. Currently, the bank lenders is chasing after the ship owners, treating them by the gun. But what will be the future? How will change the tie between the ship finance and shipping and ship owners in the close future? Probably a traditional banker will be flanked by the investment bankers. This is my view. But I want to anticipate my conclusion. I prefer to go through the presentation moving onward. So, equity capital market. So, equity capital market moderates, as most of these emissions were follow-on ones. We saw few hypos, and the investor pay attention only for the hot sectors, in example, tanker, or were attracted by interesting niche markets, like in industrialized sectors like chemical and gas. Anyway, therefore, more than $2 billion were raised in the last year, but most part of that was allocated on the tanker sector. Unfortunately, the stock market is affected by the disappointment because equity capital market is quite suspicious, since the shipping secured very poor return, and feeding the debate if the equity capital market is adequate, is suitable for shipping industry. So public investors was, as mentioned, disappointed because a moderate returns secured by tanker market in the last 5 years, a mere 3%, and worster for the dry bulk, which cumulated a negative return by more than 17%. But probably this was caused even for the wrong approach kept by the ship owners and respect the needs of equity capital market. So, you know, my personal view in respect to the Scorpio case. And last year, when I attended the edition of Shipping Law, I claimed against Scorpio for the wrong approach kept. So, but it's time to buy shares. Probably it's time to buy shares and to sell ships. You see in the graph below that the stock share prices dropped and approaching the bottom, and maybe it's the time to buy shares. But it's not a good sounds for new entry for the IPOs. So a lot of good companies, mostly in dry sector, priced at a discount on net asset value. But the question is, how many of them will survive, since currently they are negative cash flow generators? As you see, as by the graph that a very good names are pricing below the net asset value. As maybe an attractive potential opportunity for investors in second-hand stock market. So anyway, this is not good for IPOs because the ship owners willing to tap the equity capital market are constrained to offer their shares at huge discount and probably will delay the final decision. As the private equity was frequently, last times, accused to cause the crisis, but it's not true, this is my point of view. Anyway, they live the same experience of public equity investors. And nevertheless, was splashed out an amount close to 5 billion during the current year. Anyway, as I stated before, a mere 3% of order book was backed by private equity. So, and the high expectation were faded. And probably the private equity investors were disappointed. And big names invested in shipping like AMA, Apollo, York Capital, Oaktree, our friends of HIG. So, and so rapidly going onward on the other sectors of ship financing, bond market is a different situation. Bond market grew rapidly and gained a large position in the ranking. What's the reasons? So shipping, as you know, is an interesting asset class which fits perfectly for long-term investors. An example, pension fund, insurance company, patient investors. So they are finding seriously the alternatives to the very low return secured by a traditional fixed income, mostly sovereign bonds. So, and personally, I believe there is a large room to convey huge money, huge funds to through the private debt capital market, and mostly by the stimulating the establishment of new private debt funds. But I like to represent to you a summary and a large picture of the state of the market, the current state of the market, and the main change since 2007, when the bank lending represented and dominated the ship financing. Roughly the 70% of financing provided were drawn by the traditional lending. So the framework dramatically changed. So less traditional banking now, more public and private capital market. So, and if you clean these figures, we can state the situation, the downsize of traditional lending was more acute, because just to give an example, we cannot compare the money applied by private equity with the money applied by the traditional lenders. And for $1 invested by private equity, the private equity applies $1.5 drawn by the traditional lending. So this table is quite a representation of a dramatic downside of traditional lending. And I like to note that the debt market, the direct debt market usually grew. Bond market now represent close to 34% of the total financial providers. So we're close to conclude. So banks, traditional banks, has half walked away. As the market is almost right, equity capital market is half closed. Price net asset value is below 1, and it's time to sell the ship to buy the shares, and a very harsh time for new entries. Private equity is only bullish for is only active for bullish sectors or for niche market. Bond market is catching a good moment and is enjoying the window, because since the drop of sovereign debt yield and the huge variance between the yield, the return of sovereign bonds close to 0, and they represent an interesting asset class to splash out money by patient investors, long-term investors, as mentioned before, insurance companies or pension fund. But how will change the shipping company? How will be the shipping company of the future? Where does the ship owner seek for capital today and the future? We are attending at market disintermediation. This is the sense of my analysis. From traditional banking channel to direct private and public market. That's the future, so it needs a different skills. Once upon a time, a patriarch, one-man show, and the family banker. The shipping company of future is centered on the knowledge, management, organization, as low to counter the capital market requirements. So, I want to close my presentation by a quote, a claim, and probably don't hear well for somebody. So across last century, and frequently speak with my Greek friends, across the last century, ship, asset class, ship, represented the cause of your work. For the future, my expectation is quite different. It will be the outcome of your knowledge. This is the challenge of the future. Probably, and I am quite confident in this my statement, that the main challenge of the future is to change the way to do the shipping. I have not words, and I expect to feed your discussion. Diego, thank you very much. And so keeping alive your following debate. Thank you very much.